Are you a real estate investor looking to protect your properties with insurance? Well, you might be shocked to learn just how much it can cost. Insurance costs for real estate investors can be insanely high, especially if you own multiple properties or if you're in a high-risk area. This is why it's important to understand the different types of insurance and how you can get the best coverage at an affordable price. As a real estate investor, there are several types of insurance that you should be aware of. These include property insurance. This type of insurance covers damages or losses to your property, such as from fire, theft, or natural disasters. It can also cover any attached structures like a garage or shed. In coastal states like Florida, Texas, and California, these insurance costs are skyrocketing. Prices have gone up 2 to 3 times what they were a few years ago. These increases are anticipated to have no end in sight. Liability insurance. This type of insurance protects you if someone is injured on your property and sues you for damages. It can cover medical expenses, legal fees, and other costs associated with the lawsuit. Rent loss insurance. If your rental property becomes uninhabitable due to damages, this type of insurance can cover the lost rental income until repairs are completed. Flood insurance. This is separate from property insurance and covers damages caused by floods. It's important to note that most standard property insurance policies do not cover flood damage. Umbrella insurance. This acts as an additional layer of protection for your assets, including your real estate properties. It can provide coverage for any gaps in your other insurance policies and protect you in the event of a large lawsuit. Now that you have a better understanding of the different types of insurance, here are some tips for getting the best coverage at an affordable price. Shop around. Don't settle for the first insurance policy you come across. Take the time to compare prices and coverage options from different insurance companies. Bundle your policies. Many insurance companies offer discounts if you bundle multiple policies with them, such as combining your property and liability insurance. Increase your deductible. A higher deductible means a lower premium, but make sure you have enough savings to cover the deductible in case of an emergency. Maintain good credit. Insurance companies often use credit scores to determine premiums, so it's important to maintain a good credit score. Review and update your policies regularly. As your real estate portfolio grows, make sure to review and update your insurance policies accordingly. You may need additional coverage or higher limits as you acquire more properties. Consider working with an insurance broker. Insurance brokers can help you navigate the complex world of insurance and find the best coverage for your needs at a competitive price. Invest in risk management. While insurance is important, it's also crucial to minimize risks by implementing safety measures and protocols on your properties. This can help prevent accidents and potential lawsuits. From liability coverage to property damage protection, the expenses can add up quickly, eating into your profits. If insurance expenses outpace your rent increases, this will decrease your net operating income and lower the value of your real estate asset. Therefore, it's important to regularly review your insurance policies and make sure you are getting the best coverage at a competitive price. Remember, insurance is a crucial part of protecting your investment, so make sure you're covered. Just be prepared for the sticker shock. Thanks for watching the video. Don't forget to subscribe to our channel for more real estate tips and tricks.